Have you ever felt that sinking feeling in your stomach when you check your investment portfolio? It's unsettling to think about your hard-earned money slipping away due to a simple mistake. Many people overlook a critical issue that could jeopardize their financial dreams: being reactive with their investments. What if I told you that reacting to market changes could actually be the real threat? You might believe you're adapting, but your strategy could be undermining your financial future. It's not just about what you invest in, it's also about how you respond when challenges arise. Imagine you reading a headline about a market downturn and suddenly feeling panicked. You decide to sell everything, thinking you are protecting your assets. But how many times have you heard stories of investors who acted too hastily and regretted their decisions? It's a trap, and you might be stepping right into it. You may think you are being smart by cutting your losses, but have you considered how this affects your mindset? Each reactive choice heightens your sense of panic and damages your confidence. Soon, every market fluctuation feels like a personal attack, creating a cycle of anxiety and misinformation. Let's say you see a company you've invested in facing difficulties. The urge to sell can be overwhelming, but what if that company has strong fundamentals? Imagine missing out on a recovery simply because you didn't take a moment to breathe and analyze the situation. As emotional beings, we often let fear drive our decisions, leading to a portfolio filled with rash choices instead of a well-thought-out strategy. You might think you are being proactive, but you are really just reacting to the noise around you. The market is designed to test your resolve, and if you're not prepared, it can cost you significantly. Now, here's where it gets interesting. What if you could step back and reshape your approach? Instead of reacting, you could learn to anticipate. It's about creating a system that empowers you to make informed decisions rather than relying on knee-jerk reactions. Picture this: you calmly evaluate your investments, weighing the pros and cons without the pressure of external chaos. You might find that focusing on your long-term goals brings you more peace than getting caught up in the market's emotional ups and downs. But here's the catch: you have to commit. It's not enough to understand the dangers of a reactive portfolio. You need to actively cultivate a mindset that resists impulsive decisions. Take a moment to reflect. What influences your choices? Are you letting fear guide you, or are you ready to adopt a more strategic approach? The next time you feel that urge to react, pause and think about your long-term vision. Investing isn't just about numbers, it's about mindset. So, are you ready to take control of your financial future, or will you let your emotions steer your path? Remember, your money deserves a thoughtful plan, not a frantic response. Many people overlook subtle signs that their finances might be at risk, and the danger could be closer than you think. Imagine logging in to see your numbers fluctuating while missing the hidden warning signs. Most folks brush these off, thinking everything is fine. But ignoring these signs could turn your portfolio into a ticking time bomb. It often starts with small shifts. A stock you once loved suddenly is performing well, and you might convince yourself it's just a temporary setback. But that's where the real danger lays. Each time you react without careful thought, you're giving in to fear, which clouds your judgment. Let's take Sarah, an everyday investor. She had a strong portfolio, riding high on a tech stock boom. One day, she noticed it starting to dip. Instead of analyzing the situation, she sold in a panic. Fast forward a few months, and that stock skyrocketed again. Sarah did just lose money, she also lost confidence in her decision-making. What if those small reactions are just the tip of the iceberg? Beneath the surface lays a deeper issue, a reactive mindset. When you are always reacting, your perspective on money shifts. You begin to see every dip as a disaster rather than an opportunity. It's a vicious cycle that can spiral out of control. Imagine watching a stock plummet. Instead of stepping back, you fixate on the loss. It's tough to think clearly when emotions are high, leading to dangerous mistakes. You might even find yourself chasing trends instead of sticking to solid strategies. Those who react impulsively can quickly get trapped in a loop of regret and missed opportunities. It's not just about losing money, it's about how it changes your entire approach to investing. So, how do you break free from this cycle? First, awareness is crucial. Recognizing when you're reacting instead of responding can be a game changer. Instead of jumping at the first sign of trouble, take a deep breath and analyze the situation. Take a say, and it's an sign, and an Think about your own journey. Have you ever lost sleep over a dip in your portfolio? Maybe it's time to turn that feeling into a moment of reflection. Ask yourself, what does this say about me investing habits? Ultimately, it's not just the numbers that matter, it's how you perceive them. Developing a resilient money mindset can shift your approach from reactive to proactive, and that's where real growth begins. The next time you check your portfolio, dig deeper than the surface. Look for those hidden signs. And remember, it's never too late to change your perspective. Your financial future depends on it. If this resonates with you, consider subscribing for more insights that could transform your investing journey. What if I told you your investments might be quietly signaling for help? It sounds dramatic, right? But stick with me, what you overlook could be costing you more than you think. Picture this: you're reviewing your investment portfolio, and everything seems fine at first glance. However, beneath that calm exterior, trouble may be brewing. Many people overlook the dangers of a reactive investment strategy, impacting not just their finances, but also their entire mindset about wealth. Have you ever felt that sinking feeling after a sudden market drop? It's more than just fear, it's a sign of something deeper. When you react impulsively to market changes, you lose control, which is harmful not only to your portfolio but also to your peace of mind. Consider this: you make an investment, and as soon as the market shifts, you pull your money out. Why? Because you're afraid of losing. But what if that fear signals that your investment strategy needs adjustment? You might think you're being cautious, but you could be feeding a cycle of anxiety. Text your friends for advice, and since they're anxious too, you decide to sell. Later, when the stock rebounds, you're left questioning your decision. This knee-jerk reaction traps many, reinforcing a negative mindset that views money as something to fear rather than grow. As you navigate the investment landscape, remember every panic-driven choice could set you back years. It's not just about the money, it's about how you perceive your financial future. Are you building wealth or merely reacting out of fear? Think about standing on the sidelines, watching others succeed while you're stuck in a cycle of second-guessing. Frustrating, right? The key isn't just making the right moves, it's understanding your relationship with money. So, what's the solution? It starts with awareness. Recognizing these stress signals is the first step toward breaking free from that reactive pattern. Build a strategy that aligns with your long-term goals and practice patience. This isn't just about investments, it's about your mindset. Reflect on how you tackle challenges in life.